I haven't done a day trade in crypto in a really long time. I'm all about the swing trades right now because when you have these like little candles, there's so much whippiness in it that even as a day trader, it's hard to even figure out, like, am I going to get the bounce? Because remember, as a day trader, you're getting in and then you got to get that bounce fast because you're using more leverage in day trading in general. The idea is, like, as a day trading stocks, for instance, I did a trade today and I just made 50 cents on a stock, but I did enough shares where I made a couple $1,000 on it, kind of thing. Leverage is going to make you more emotional because you have more on the line. And the key is understanding that any market, stocks, commodities, crypto, markets will push you to extremes. And if you're already emotional when you get in a trade, the emotional aspect is going to get much more kind of, magnified, and you're going to make the wrong decision at the wrong time because of that emotional nature. So I always say to people, like, if you want to become a millionaire with just $10,000 or $20,000, even $5,000, it's really that slow and steady progression, because if you try to do it too fast, the emotional kind of pitfalls will catch you, and then you'll blow up your account, and then you're basically at zero versus even at $5,000 or $10,000. This is the NASDAQ chart, and you hit the high of the line here, and you pulled back to the low. Went up here, pulled back to the lows, and then look, you just pierced the high. And so you might say, okay, well, that's interesting. That's just one. But then look at this. What if we drop a line directly down, connecting the high here? This is basically the all-time high to that pivot, and look at what we hit. So this is, so basically we're falling today. The NASDAQ's down 1.3%. And you could have looked at this chart before the jobs number, and this is what I did, and say, I have no clue what the jobs number is going to be, but the probabilities are that you're going to see a sell-off in the markets because you're into two trend lines right there. And sure enough, boom, sell-off.
Ethereum, is an interesting one too. And I think right now in the short term, Ethereum's kind of telling the story, right? So this range I've been looking at for Ethereum is from last year. So this is from Q1 of last year that we were looking at as it entered back here on June 11th. We were looking for point of control, range low. Obviously, we met both of those. And from there, we've been struggling at this value area high right here. And in the short term, I would imagine that we're going to come down to this region, this untapped monthly key level. And then we also have a golden pocket, a bunch of things aligning in this region, which is back down to like $1,200. So kind of getting back to in the short term here, a pullback before we continue higher. And then we'll have to see how things kind of present themselves in September. But September to me is interesting, and I know everybody's kind of got their own September idea at this point as well. So I guess that's kind of the idea there, right? So very similar to that NASDAQ outline is what I'm kind of anticipating, but obviously we'll see how things unfold.
Pink sheets are little public equities stocks that don't trade on the big exchanges like the NASDAQ or the New York.
Like the penny stocks.
Penny stocks, but penny stocks can be different types. There's over-the-counter penny stocks, and there's pink sheet penny stocks, and they're not necessarily all penny stocks. They can be big companies, like Luck. What was the coffee company out of China that turned into a scam? Luckin Coffee or whatever. But anyways, they trade over there too. Well, I just looked at this yesterday or 2 days ago because someone asked me. There are 16,750 pink sheet stocks. Probably about the number of tokens there are, probably, right? There is no protection for anybody anywhere coming from the SEC, and that already falls under their purview, right? They're supposed to be protecting you. There are funds, ETFs and others that incorporate stocks from countries that have no SEC-like protections at all.
I like when things are kind of getting bashed. So like the Solana hack recently has me kind of keeping an eye on it. And on the chart, what's interesting about the chart is you got this tightening wedge pattern forming, and you're right at the low end of it. So basically, if you're looking to take a little bit of a trade, the trade here would just be to buy this low end of this support line. And if it were to close below or confirm below, you just exit for a small loss. So you have a very defined stop in that respect. Now, the upside would be is if you trade up here, you have resistance. So you have a nice distance. If you do like a risk reward assessment, which every trader should do on every trade, your reward is basically from here up to here, and your risk is really tiny. I mean, maybe down here, something like that. So that's a nice risk reward. And then the other side too would be that if you get up to here, maybe you leave half on the table to let it ride in case it breaks out. If you break out, you have some upside to maybe as high as $58. So again, you know, it's always one of those things where when everyone's hating on something, that's where I'll start kind of taking a look at it. In this case, the chart's intriguing to me. I fully go into a trade like this saying, hey, listen, it may break below that line and I may just stop out, but at least the stop out would be a very small one versus the reward that I potentially would get if we start to see this thing start to roar higher. So I would say that's an interesting chart for me.
They don't care. You can still buy them and sell them, right? There are companies that are bought and sold on big exchanges that have no audit rights whatsoever. You don't have any idea if the numbers are accurate. And so when the SEC comes in and says they want to protect investors from crypto, they're not even doing their job with what the area they're supposed to do their job. And then you've got the issue of their approach to trying to figure it out. You know, the SEC does this thing called regulation through litigation. Meaning they don't come out and say, here's the rules that we want everybody to follow. Give us your comments. They do what they did with Coinbase. They sue, right? And they'll sue you. And their hope is that the result of the lawsuit is then turns into precedent that they're able to use to enforce the way they want to enforce it. It's not like someone today could just call the SEC and say, okay, we want to issue a token. We have this, you know, crypto business, tell us what we need to do. There's just no way. And so as a result, there's all this uncertainty, which is why you see more crypto companies in Singapore and the Bahamas and the British Virgin Islands, in Caymans, all these different places. And people are afraid to do anything here. And now you look at the big companies like Coinbase who create jobs and are trying to do it right. They're getting fucked over. And so there was, I forget which politician that said we should do it through the CFTC instead of the SEC. And they're right, because the SEC, you know, they care more about hiring more lawyers than getting it done the right way. We are in the metaverse right now as we speak. Unfortunately, I'm in the down under metaverse and it's dark down here. You know, Vecna has its own metaverse. You know, it's just everybody, you know, you put people that focus on VR want that to be the metaverse, right? People want Web3 to be the metaverse. Anytime you have more than one person together, there's no rhyme or reason to it yet. Now, will there be? I don't think it's going to be hard to standardize things and to make it interoperable, at least for the foreseeable future. And so, you know, I think metaverse is just like a Zoom, just like this, right? Only whatever platform you choose to aggregate people. And then you hope that grows into community. And I think probably the greatest takeaway now that I think about it, if you look across just general business and you look across crypto, Web3, if you want to call it that, metaverse, it all comes down to community.